Hi, everyone. This is Sandra Cho, Pointwealth Capital Management, and we are about to go over the real estate outlook, buying, selling, and financing in today's market environment. I am going to be introducing a very wonderful panel of two people that are experts in their field of buying, selling real estate as a real estate agent, and then also as a mortgage and real estate financing expert, Anna Duran Valdez and Tony Valdez. In the meantime, I'm going to quickly be going over the 2024 outlook. I'm going to be sharing my screen right now. This video is being recorded, so if you object, please drop off. Okay, so 2024. First of all, 2023 was definitely interesting. The market saw double-digit returns when we really thought at the beginning of 2023 that we might see a mild recession. Thankfully, we did not, and we saw better than expected consumer spending, which definitely helped things. Now, in 2024, really, the name of the game is going to be about rates and inflation. So inflation continuing to coming down, moderate returns, consumer spending, and jobs. And I'm going to be going over some bright spots in the market. So first of all, where do we see rates and inflation heading? Well, the Fed has already announced that they're going to be cutting rates at least 3 times in 2024. And why does that matter? Well, it's less costly for people and companies with debt. So just like Tony Valdez is going to be going over today, it is, mortgage rates start coming down. It's less costly for people to finance cars, houses, and take out personal loans, as well as credit card debt. Also, not to mention student debt, which we now have to also be concerned about. But also companies. Now, not all companies are the same. I'm going to be going over that a little bit. It's also easier for companies to finance their growth and their spending, and it definitely helps smaller companies more than large. So we might see a pickup in small cap, which is underperformed relative to these really huge, large companies, tech companies. And we call them specifically the Magnificent Seven because there are 7 of them, including NVIDIA and Meta, for example, that have done exceptionally well. These 7 growth stocks have actually, in 2023, went up 75%, if you believe it. And that made up more than half of the gains of the S&P 500 last year. Moving on to market returns, what can you expect? Now, no one has a crystal ball, but obviously, we do have what our expectation for this year might possibly be. The market is expected to be choppy. It's a presidential election year. And generally during presidential election years, the market tends to have more volatility. That said, it looks like we're going to have a soft landing, which would be amazing. There might be a mild recession, but let's remember that mild recessions are part of a normal market cycle. We expect stock market returns for the S&P 500 to be high single, low double digits. And we do expect that there would be a soft landing. That's what it looks like. And I'm going to go over that a little bit more. Why do we expect a soft landing? Well, consumers are still spending, and consumers make up 2/3 of the economy. Even the Council of Economic Advisors and the government says, as the U.S. consumer goes, so goes the U.S. economy. So consumers keep spending. And why do they keep spending? Well, the job market is still robust. And if you're working, you are spending. But there is a disconnect between the numbers because it looks like employers are saying that more jobs have been created, more than expected, over 300,000, in fact. But the household survey says that actually more than 80,000 jobs have been lost. So there is that disconnect. Now, there are some bright spots in the market. With interest rates forecast to go down, we have actually reposition the portfolio to have some more longer term bonds and lock in higher interest rates now that we know they're going down. We are also overweight value, which has not gone up as much as these magnificent 7 tech stocks, large cap growth, asset classes. So anyway, and even year to date, as short as it's been, value definitely has outperformed growth, and high dividend paying stocks. We definitely are pro these high dividend paying stocks and small caps because they are trading at a discount, and select emerging markets. So for example, India, Japan, actually, apologies, Japan is not an emerging market, but it is an international market we are very excited about. India is the emerging market that we are, India and Latin America, we're very excited about as well. And home buying and building looks to be on the upswing as rates come down. So you can see our full outlook on Bloomberg. You can click on the link that is located on our website, pointwealthcm.com. It's on the landing page right when you log on. If you scroll down. Also, if you click on Money Talk, you will be able to see all of the interviews and our market perspective as broadcast on Bloomberg TV and radio and Yahoo Finance. With no further ado, I am going to now introduce Tony and Anna Duran Valdez. So one second. Okay. Anna, if you will unmute and start your video. Okay. Hi, Anna. Hi, Anna. How are you? Oh, you're muted. If you can unmute.
Sorry. Here we
Yeah,
go.
perfect.
There we go. Happy New Year. Hi.
Hi, Anna. So I've known Anna for, a few years since college, and Anna has over 20 years of experience. She primarily specializes in the Valley, anywhere from Palm Springs to Santa Clarita and Ventura County. Anna's going to be talking about the real estate market today, both from the buyer's perspective and the seller's perspective, as well as the kind of outlook. So Anna, I get lots of questions from my clients, and I wanted to know from you, what are the answers? What are the most common questions you get regarding real estate right now?
Most common questions are, is now a good time to buy? Is now a good time to sell? What's happening with the market? Is it going to crash? Where do I see it going into 2024? Here we are in 2024. So to answer all those questions, I mean, basically is yes, it's a stellar time to buy, build one's equity. It's a great time to sell. Although there is still limited inventory out there for buyers to buy, sellers are now realizing, okay, they're ready. So all in all, yes, it's a great time to buy.
Okay, and so for right now, I know that a lot of people are worried that the housing market is going to go down. You mentioned like that you don't see it crashing. Inventory is low. There are so many buyers out there. What do you see as far as a housing market? Do you think it is going to go, not crash, but go down in the near future?
No, what I've seen and kind of followed, obviously, is, as interest rates rose up, we saw the prices of the homes kind of teeter-totter and balance out a little bit. Sellers were no longer, let's say, shooting for that, over aggressive list price, hoping to get that. Now they've had to kind of make either a price reduction as the rates went up, they saw that their house wasn't moving at that price. So we saw fourth quarter pretty much the prices normalize and kind of even out. Now that we've had this tick downward of interest rates, it's nice to see that, okay, prices have normalized. However, all the economists are saying that, yes, prices will probably most likely continue to climb up, especially as buyers enter the market. That kind of supply and demand
Is really going to,
will again bring prices up.
Right. And then right now it looks like a house sells after about 50 days on the market, including a 30-day escrow, and a seller is getting about 100% asking price. Are you still seeing, like, the multiple offers and the crazy 100,000, 1 million over asking type of environment, or you see it more stable?
It's evened out. We are not seeing the crazy market that we did during COVID, where interest rates were super low, that money was basically very cheap. And so yes, the buyers would go in 100, 200, $300,000 over ask, over list price, and it would appraise, and everyone was wowed and happy and thrilled. Now we're seeing, though not the multiple offers of 20 per house during that time, we're seeing about 2 to 5 offers on a well-priced, prepared home.
Fantastic. Okay, and so some people like to wait until the spring in order to buy. Would you say that's the kind of best strategy, or would you say they should get out now?
It's a great question. It's obviously always going to fall back on what your personal circumstances are. If you can wait, maybe waiting is going to behoove you because you want multiple offers, multiple people coming through the house, or maybe you need the next 2 months to prep your house in order to go live in March. If you have to get out right now, I would say, let's get you listed.
That's more for a seller, right? I'm sorry. That's more for a seller. I was talking more on the buyer side.
Oh, I'm sorry.
Would you say it's better for buyers to wait to the spring in order to get out there and look? Or would you say, like, they should get out now and start looking for the home that they want to buy?
Yeah, I would get out now. Less competition, even though the rate has dipped. You can always refinance, but getting out now, you're shopping with maybe 2 or 3 other shoppers, as opposed to in the spring, you're going to be shopping with 10 to 20 more shoppers.
Yeah, and I always tell clients, look, it doesn't hurt to start looking. If you find that house that you absolutely love and have to have now, then there will be less buyer competition out there, usually, like right around this time. So there are pros and cons to it. And then you have all the time that you want, depending on your situation, if you want to wait for, a higher inventory period like the spring, like, March and April.
Right. If you're one of those buyers out there that wants to see everything before you make a decision, then yes, perhaps spring and summer may be your best bet. But if you feel like, heck, you're ready right now, go ahead.
And then what do you see as some of the pros right now about home buying? Rates used to be super high. Do you see that is better? Do you see more movement? Do you see more movement in the market?
If you're going to buy right now, I feel like it's a great advantage because, again, like I just mentioned, less competition, less amount of buyers out there that you're competing with. In other words, maybe you're not having to bid over ask price, but also as the market continues to improve and values continue to rise, you're moving into that house with some equity already. So that's a huge benefit as well.
And then now from the seller point of view, where do you see, what a seller can do? What's the best advice you can give to someone who is looking to get the best price on their home and they're selling?
First and foremost, I would say, if you're aware of anything that you may want to repair or update, you have a discussion with your professional realtor. And then on a more simplistic level, step outside your house, put on a buyer's cap, put on your buyer eyes, and walk your home from curb to backyard and just kind of walk through like, hey, is there anything that you notice that if you were to buy your own home, would you buy it for the price that you're asking? In other words, does a fresh coat of paint on the front door from the sun fading it over a couple of years, that always makes that great first impression. New flowers in the front yard, a fresh coat of paint, windows cleaned, floors washed, some very general things to just make the house shine in its best way. I always like to say when a homeowner is going to put their home on the market, you have to think about it as like you're going on your prom date. You get your hair done, your makeup done, a nice new dress, everything from head to toe is just uber nice. So you make that great first impression.
Yeah, and I really, when I sold my house, I really found it valuable before that I had, a professional, whether it be you or anyone. I'm professional as a professional. People use me because they know I'm doing investments day in and day out. Now, with a professional realtor or real estate broker, they have that eye. They're able
Mm-hmm.
to look through and say, hey, we might want to stage this.
Right,
You might want to declutter. You might want to get a pre-inspection to
right.
help identify items to repair and replace prior to going live, these kinds of things. So I just, for me, I really value that expertise.
Right.
So anyway,
And buyers
um,
know what they want these days. They absolutely are gathering information. They're getting inspiration from Pinterest. They know what they want, whether it's, the small little house to a large home. They know what they want.
yeah, thank you. And then, what should someone look for in a realtor? What are some of the main qualities that they should really make sure that they have?
Whether you're buying or selling, I would say some key points is definitely somebody that is a strong negotiator, good communicator, someone that is experienced, can kind of foresee any issue prior to an issue coming up. How are you going to know that in just meeting with them? Meet with them, have a cup of coffee. All realtors love to meet with clients, buyers or sellers, kind of feel each other out. It's got to be a mutual friendship going forward. You're going to be with this person for the next 30, 60, 90 days. You really want to feel like they are advocating for you and for your best interests.
Mhm, mhm. Yeah, and then what about capabilities? Like, is it important, for example, to be able to do drone videos, virtual tours, social media, uh, paid advertisements to a targeted audience, partnering with top realtors? Is that important, or is it just about the relationship, knowing that they're an advocate?
No, absolutely. You're going to want, all of those things I mentioned, plus partnered with somebody that knows how to market a property correctly. We often get teased that, oh, a realtor just sticks a sign in the yard and puts it on the MLS. Well, that is not the case anymore, nor should that be what any seller expects or would hire somebody for. You want somebody to market it in so many different realms from the social media, internet, networking with other brokers, buyers, investors, all of those things.
Right. And one thing that I'll mention is when we bought our house, it was really interesting because we were the only people to view it. It was a private listing, and it was just, within that network of realtors.
Mhm.
So you're with Compass, and I know that you share listings with other Compass, realtors. And a lot of realtors, well, not a lot, some realtors are able to do that.
Right.
Um, Second to last question, hot spots where people are moving to. We hear a lot about people moving from California. Where are they moving to?
Right now, we've seen the largest departure from California. About 69,000 people have left California and moved to Texas. So that's anywhere from New Braunfels to Austin, Dallas, the suburbs. Texas seems to have been the hot spot this past year, with South Carolina, Tennessee, Montana coming in as well. And anybody that is coming into California, it has been San Diego has been the hotspot. So we're probably evening out a little bit with how many people have left California to how many people are coming in.
Okay, last question, because I know you've got to run. First of all, tell us anything that that I might have forgotten to ask you that you wanted to impart. But I also wanted to touch base on, some of this controversy about should I use a realtor? The commissions are so high. Maybe I'll just do it on my own or use a discount broker or use the seller's agent. What can you speak to about that?
Good question. I mean, it's always obviously that whole mantra of you get what you pay for. So you want to work with somebody that is respected, licensed, knows the ins and outs of real estate law, knows the ins and outs of contracts, your contingencies. This is your largest purchase of your lifetime. You want somebody that knows how to read, how to understand, how to follow the timelines, and also just be that person for you, handhold you through the whole process. That would be my biggest suggestion for anybody looking to sell or buy. There's a lot of liabilities going on right now, or lawsuits going on. We're held liable, and our job is to protect either the buyer or the seller from any litigation whatsoever.
Okay, fantastic. And then any additional comments, anything that you wanted to add, or Anna, anything you
Oh,
want to sorry.
I would just say, this is 2024 is going to be a really strong year. We're already feeling it, both myself and my husband, getting pre-approved right now if you're looking to buy or have relatives looking to buy. Children, your children, it's always good to start early. I've already gone out to show property, right up day after Christmas with a newly married couple. I mean, they're ready. They lost out this last year on a great home, and they're ready now. So I would say just roll up your sleeves, get in touch with a professional. First and foremost, your lender and the realtor or partner together, and let's have a discussion. Let's have a consultation on what are the steps to do to get out there, either to buy or sell.
Okay. Thank you so much, Anna. Really appreciate it, and have a great day. I know you're leaving right now.
Thank you.
Good luck on the showing.
On the showings, yes. Thank you.
Okay, thanks. Bye-bye.
Thank you so much for having me.
Thank you. Okay, so now we have Tony Valdez. If you can start your video, Tony. Okay, thank you so much. And if you can unmute.
Hey there, Sandra. How are you?
Great. Let me just pin you here. And perfect. Okay, Tony Valdez. Thank you so much for joining us. I just wanted to introduce you. You have, I think, 23, 24 years of experience. I mean, I know you're only 24, so you must have started at birth, but yes. And I've known Tony for as long as I've known Anna. So all the way from, those college days, just yesterday, right? So anyway, so Tony is with PRMG, I believe, right?
Yes.
And he does everything from mortgages, home equity lines of credit, to even unconventional loans. And I'm going to be asking him about that because I definitely have had several clients that have needed to do that. But Tony, take it away. Let the viewership know what's going on right now in the mortgage industry. Where are rates, and the environment?
Yes, perfect. Again, thank you for having me, Sandra. Great to be here. Yes, the mortgage world, saw 2023 as a rough year. We saw rates climb up to as high as 8.5%, which is pretty scary. It squeezed out a lot of buyers from being able to afford homes because they went from a low rate environment to now a super high environment. So I'm super excited for what the new year brings. 2024. It looks like the Fed has come out and said that lowering the rate is in their radar. Hopefully, at least 3 times is what they've come out and hinted at. No promises, no guarantees, but that in itself bodes well for an industry that really came to a screeching halt in 2023 as far as transactions go, right? When rates went up, when compared or as compared to what we saw during the COVID 2021 years, where rates were super artificially low and lots of activity going on from a refinance or a purchasing standpoint. But overall, super excited for what the new year will bring. We're looking forward to helping a lot of families that have been on the sidelines waiting for the rates to come down, and it looks like we peaked as far as rates going up, and now we're seeing rates with good credit as of today as low as 6.375, which is phenomenal. That's on the conventional side. Now, if we look at VA or FHA, rates could be as low as 5.75, again with excellent credit. Really excited about that, and I'm looking forward to what the new year will bring.
Wonderful. So that leads me to some questions about rates and credit. Would you say that, what would you say is like the base credit score that you need in order to qualify for a home equity line of credit and for a mortgage?
Right. Great questions. And that's a question that we're often asked, right? What's the minimum? And the mortgage world is all about risk. And the better your credit score, the lower risk you are. So the better your credit score, the lower the rate that you will have. And if we're speaking about minimums, the minimum credit score that we can lend on is as low as 580, right? 580, which is pretty low, but that's the bare minimum on a first mortgage. If we're talking about home equity lines of credit, they're a little more conservative, and the rate that or the minimum credit score that's required there is that of 660. Again, it just speaks to risk. The lower the risk, the lower your rate will be.
And then you mentioned before that a lot of people got squeezed out last year. Rates just skyrocketed, and a lot of people also got scared. But HELOCs, home equity lines of credit, really took off. What are some reasons why people opened up or started a home equity line of credit?
Yes, well, the home equity line of credit is something that's very popular, very common that we do right now. It's a way for folks to tap into their equity for short-term purposes. It's never a long-term vehicle, but for short-term purposes, it has great use. For instance, we have a lot of clients that used it for home improvements, home renovations, home additions, the likes of like an ADU that's very popular nowadays. We've seen people use it for big events like weddings or paying for tuitions or schooling for kids, right? And in some cases, we're having folks tap into that equity to help their kids who perhaps are buying for the first time. As we're speaking, right, down payment, affordability, high rates, high payment, all has come together, right? So it seems like a lot of the first-time buyers are needing help from mom and dad are able to easily tap into their equity via a home equity line of credit.
Right. And I had also, heard that people use it for like debt consolidation, estimated tax payments. I've had experience with my clients using the home equity lines of credit for like estimated tax payments, business owners using their home to finance cash flow for their business. Even if they just want to take out some money because they're they're worried. They want some extra cash sitting on the sidelines because they're worried about how things might go. Um, yeah.
Yeah.
But I've definitely heard of all the things that you've mentioned as well. Now, where do you see the 30-year fixed going in 2024? Can you speak a little bit about that?
Yes. Well, again, it's been hinted by the Fed that the rates will come down, and we've already seen that take place. And my personal opinion is that rates will continue to go down. There's no telling when, but that's the direction that we're going as inflation has tapered off a little bit, right? My hope is that rates will continue to go down, maybe into the fives. Low fives perhaps. Somewhere healthy. I'd hate to see rates go down to the artificial low rates that we saw in the past, but I don't think that will happen. For me, a healthy rate market would be anything that begins with a five. Hopefully in the low fives. I think that would be healthy for the real estate and mortgage economies.
Yes. Yes, no, absolutely. And I mean, a lot of people talk about like, when is that going to happen? Is that going to happen in March when they meet first? Some strategists think that they're going to start lowering rates in March. But we're kind of the mindset that here at Point Wealth that it's probably going to be like mid-year or late year. Doesn't really seem to matter though, as far as mortgages are concerned, because mortgage rates started coming down just when the anticipation
Right.
that the Fed was going to lower rates. So it's been dramatic how the mortgage environment, the mortgage interest rates have been affected just in anticipation of the future lowering of the Fed fund rates. That's really interesting. Now, in regards to something that we hadn't spoken about before are like, before in 2008, or I should say after 2008, banks became very, very strict. Do you see banks being as restrictive as they were before, or is it kind of easier or easy to get a loan now?
Yes. Well, yes and no. Banks continue to be very restrictive in their lending practices, right? In the sense that we want to make sure that whomever is applying for a loan has the ability to pay to make payment on that, to make good on that payment. I don't think we'll ever see what we saw back in '08, right? To that end, as an independent mortgage banker myself, not only do we not only do we lend to the full doc world, but we also have other means of lending to qualified individuals, individuals who perhaps are self-employed or perhaps have a large portfolio but don't have a pay stub or a W-2 or don't show anything on their tax returns. It doesn't mean that they're not qualified or able to make a payment on their loans. It just means that lenders like myself, who are independent brokers, need to be creative and have outlets for such borrower, such consumer to be able to take on a loan.
Right, right. So yeah, I remember when we were talking a little bit about before the webinar that you were talking about non-QM loans. Can you talk a little bit about that? Alternative documentation loans, non-QM loans, bank statement loans, ratio loans, asset dissipation, asset depletion loans. So, what are some of these avenues that you're seeing work nowadays for those people that don't necessarily qualify for a traditional loan?
Right. Great question. So here at PRMG, what we do is we use the waterfall approach to qualifying individuals, where we first look at an individual's financials to determine if they're able to go the full doc route. If not, then the next step is to consider then going into a non-QM. And non-QM simply means that we're using one of those creative ways to determine their ability to pay back on those monthly payments, right? It could be something the likes of a bank statement loan, right, where we are measuring a self-employed individual's average deposits for the last 12 months, right? It's still a very secure way to ensure and to qualify with measuring what's coming in, right? And then determining that even though he doesn't show a net gain on his tax returns, he's still generating a lot of monthly income on that measured 1 year period, right? Other ways could be, as you indicated, it could be asset dissipation loans where we take an individual's large portfolio that they might have, and then take maybe a 360 30-year average. I'm sorry, divide that by 360, which is a 30-year period, or a 20-year period, and be able to assume that if needed, they could start generating that income to pay back the loan, right? So we have
Like
banks.
deplete it, like basically take systematic withdrawals out of their investment account. And as long as the numbers look like they would be able to cover the entire mortgage liability, they would still qualify. Is that what you?
That's exactly right, right? You know, that approach is unlike going to perhaps like a large bank where they have a one size fits all. If you don't fit their perfect box, then you can't get a loan. Where as an independent mortgage banker, we're able to be creative with our solutions depending on the client's situation.
Mm-hmm. That's wonderful. And then I wanted to ask you about, what do you tell someone who, because I get this a lot, oh, interest rates are coming down, interest rates are coming down. Maybe they found the house that they want, but they're worried about getting a mortgage right now. What do you say to those people? How do you guide them?
Yes. So, right, a great question, right? As we know, owning a home is our largest investment, and with that comes a lot of uncertainty because if you're a first-time buyer, right, it could be a daunting task. But it could be as simple as just making sure that from your end, your financials are in order, that you filed your taxes, that you're current and have access to not only your tax returns but also your bank statements, your W-2s, right? And then, of course, a big one is to make sure that your credit is maintained. You don't want to be late or delinquent on your credit cards or on anything where you're making monthly payments that will sacrifice and lower your credit scores, right? So you want to make sure you're buttoned up with your financials, that you have your credit in order. That way, and of course, we can't forget having your down payment accounted for, right? Whether it's through making sure that you have it available in your savings, or if you're securing a gift from parents, right? That they have it available. So all those little things alleviate a lot of the stress that buyers take on when they start shopping and looking for homes.
Great, great. And then, also when someone is, looking from a home, this is just from my perspective, if you've found the home that you really love, that you want, that you've fallen in love with, don't forget that you can refinance. I mean, obviously there are costs associated with refinancing, closing costs and whatnot. But at the end of the day, if you found your home and, and you get the best rate that you can at the time that you get it, but then don't forget, if interest rates do come down more, then you can always refinance in the future. So, in that particular case, Tony, would you recommend that someone initially get a 30-year or get like a 5-year ARM, or, if there's an anticipation of rates coming down, or would you say like play it safe, don't get a 5-year ARM, get a 30-year fixed? What do you say to that person?
Yeah, no, I think what I would say to that is, whether you're getting an ARM, a 5-year ARM or a 30-year fix, what you don't want to do is pay points to lower your rate or to buy down your rate, right? Because you're never going to be in that home or in that loan, I should say, long enough to recover that upfront cost that you paid for those points to permanently buy down your rate incrementally, right?
That's a great point. That's a
Right.
great point, because you should only pay points, if you're going to be in that home a long time, if you're going to actually fulfill the 30 years. If you think you're going to refinance, don't pay the points.
Why do it, right? If there's a
Yeah.
chance that you will be moving out of the home before you recover the expense, or if there's a chance that you will be refinancing before you recover the expense, then don't pay points, right? Go with a
Right.
0 point loan. And of course, as we've been talking, right, we anticipate rates to go down, whether it's in March, June, or at the end of the year. The chances are, if you're buying a home now, or if you bought in the last year, you will be refinancing in the short future.
Right. Not only that, but I always tell clients too, look, your rate, it could be 6% or 6.5% or 7% right now. But let's say you want to pay more towards principal, you can actually reduce the internal rate. You can, the effective rate will be lower if you pay more towards principal, instead of, doing, like, for example, trying to get that lower rate by paying points, or doing an arm, which also can be risky, right? And then refinance later when interest rates are where you think they're going to be optimal.
No, you're spot on with that, Sandra. There's many ways to minimize your interest payment, right? And that's one quick way of doing it, by sending extra towards principal reduction. But the main thing is that we all need to recognize that rates will be going down, as the popular saying goes. Date the rate and marry the house, right? You could always refinance the rate, but you can't refinance the price of the home.
Yes, that's great. That's a great catchy phrase. Tony, any last words, any words of advice or anything that you want to impart before we end?
Yes, what I would say, Sandra, is that for all those that have been on the fence to buy or not to buy, should I buy now or should I wait until rates drop? My suggestion would be for you to buy when it makes sense for you and your family, when you know that you can handle the payment and you qualify for that payment that you're looking at for the home, right? Because as we've said, the rates will go down. That'll take care of itself, right? And you could always refinance down the road, right? As Anna alluded to earlier, right? The argument of buying now versus buying later, I would agree with Anna in that we should be buying now if you're thinking of buying, versus waiting, because the competition is only going to go up as rate comes down. It's going to bring in a lot of buyers that have been on the fence whether to buy now, buy later, as soon as those rates start to go down even more, right? Imagine if they go down into the fives. That's going to bring a lot of people that were squeezed out with that affordability gap, or a lot of buyers that said, you know what, I'm just going to wait things out until rates come down. Well, guess what? That point is coming at some point. And for those that bought now, I think that's very strategic, because they'll avoid a lot of the competition. They'll secure a lower price, and then be able to refinance down the road, perhaps for a long-term 30-year fixed rate that they won't have to think about for a while.
Last question, actually. How long does it take to originate, like, a home equity line of credit or a mortgage? How long does that take?
Yes, right now, with volume being where it is right now, we're not the crazy busy that we were a couple of years back. Right now, a short escrow is definitely in order. We can close an escrow on a purchase in as short of 15-20 days. That's not
Wow.
uncommon, right?
Okay.
Even though a 30-day escrow is usually the default, what everyone is accustomed to, but in some situations where it helps the buyer or the seller or both, right, we can't close a transaction in 15-20 days. Now, as far as HELOCs, typically, there's not as much of an urgency. HELOCs are running right around 20 to 30 days as the normal turn time from start to finish.
All right. Well, thank you so much, Tony, for the wonderful information that you imparted and the time that you spent with us. And now I'm going to share my screen so that people can see the contact information for you and Anna, in case they do want to utilize your expertise. So please feel free to contact Anna or Tony directly. In the meantime, if you have any questions about investments at all, please consider us your resource here at Pointwealth Capital Management. And once again, feel free to see not only the 2024 outlook, but all our commentary on pointwealthcm.com. And you click on the Money Talk tab on the top, and you will see all our interviews as well as our market perspectives and articles. Thank you so much. Have a wonderful day and a great start to your 2024.